Hello and welcome to the Raise Capital Legally podcast and YouTube channel, your go-to source for insights on raising capital the right way. We dive into topics that matter most to real estate syndicators and fund managers with live Q&A opportunities before we wrap up. I'm Krisha Young, your co-host, business development director, and client success coach at Syndication Attorneys. And joining me, of course, is attorney Kim Lisa Taylor, the founder of Syndication Attorneys. Now, before we get started, please note that audio and video from this event will be posted on our podcast platform, YouTube channel, website, and social media, and will be made available to the public. You can go ahead and ask questions at the end of the broadcast by raising your hand, or you can type it into the Q&A. Please note that information discussed during this event is of a general educational nature and should not be construed as legal advice. Now, today we've got from rookie to pro, do's and don'ts from a first-time fund manager. Starting a fund is not as simple as it sounds. In this episode, Hector Hernandez, founder of HDZ Real Estate Partners, shares the invaluable lessons he learned while launching and managing his first investment fund. From navigating back-end logistics like determining what to offer investors and assembling a functional and credible team, to balancing capital raising with deal flow, and resisting the urge to deploy funds too soon, Hector walks us through the real-world challenges that aren't covered in textbooks. He also shares what went right, leveraging a team of strong professional networks, maintaining a network of other capital raisers and legal advisors to keep them on track. There's something missing here. And staying true to the original mission of the fund, even when deals were hard to find. If you're thinking about starting your own fund or advising someone who is, this candid conversation is packed with insights you won't want to miss. Hello.
Hey, Hector.
Hi.
Hey ladies, how are you today?
Good, good.
How are you?
Fantastic.
So Hector, this is like the canned intro that we gave him, but Hector is a long-term client. We've gone through a lot of iterations on his fund. We've gotten to know Hector really well at live events, and also he's a regular on our masterminds that happen weekly, every week at noon Eastern time. Go for about 90 minutes. And this is our place to let our clients connect with each other, and also so that we can help guide them on any questions that they have and keep that momentum going, right? And keep giving them tasks to do so that they keep moving forward. But Hector has been a regular and not just a support. He's kind of like our alternate host, right? Because he's been so many times I'm like, hey, if I have to step away, you're it. You just keep going. Yeah. And he could totally do that. So Hector, we've just seen you grow so much when you first came to us, in your knowledge and your confidence, and all of that. And we're just, super excited that we were able to be part of that. And I believe it's been profitable for you. So we want to explore that because there's a whole lot of other people that we could help the same way. And we want to, I think that's what makes us a little different than other law firms, is that we really focus on education, foundation, and support, and making sure that our clients just don't get legal documents. They get questions answered whenever they need them. They get direct access to us, in either a group forum or even privately. And we can really help them grow as they start and embark on their careers. And we help a lot of people that have never done this before. So enough about us. Hector, tell us about you. What's your background? How did you get started in real estate?
Well, first off, thank you for that amazing intro. Trust me, I get a lot more value from you guys than you guys get from me. Like sometimes I feel like I underpaid you for sure. Like it's ridiculous amount of value that you guys deliver from the mastermind, and like you said, just direct access. It's been truly invaluable on my journey. In terms of my background in real estate, I think it was always meant to be. I joke with my wife all the time that real estate was my first love. Even though we met when we were teenagers, I had already kind of fallen in love with real estate, and it was just kind of always meant to be. I think certain trajectories of my life just kept putting real estate right in my life from a young age. I think you know this, Kim. I'm a Cuban immigrant. My parents fled Cuba when I was 9, 10 years old on a homemade boat. And so growing up, they worked really, really hard. And one day, my sister bought one of these late night infomercials, how to buy real estate for pennies on the dollar. And it just like blew my mind how rich you could be being a real estate investor and how easy life would be. It was not that, nowhere near as easy as they made it seem. But it opened my eyes to something. And then I saw it happen in real life when my parents sold the house that they had bought just like 4 or 5 years later for double what they had paid. And of course, they had used a mortgage. This was the early 2000s, right? Late 90s, early 2000s, the big boom was happening, and they just did fantastically well. I was like, wow, this is proof. So fast forward a couple years later, I'm in college. I decide I'm going to school for IT, but I'm going to get my real estate license. And kind of, in the interim, I had bought my first house, and the broker who sold me the house, who, by the way, he did seller financing for me, became my mentor, my coach. I became kind of like his IT guy for his real estate company, and taught me everything he knew about real estate. By 2009, we're doing some of the first ever short sales to be done across the country, right? We're learning right alongside with the banks. And then 2012, I bought my first investment property. Not because I was a genius and that was the perfect time. I needed a place to, for my mom to live. And I heard about this thing called house hacking. So let's try it out. And it worked fantastically well. Fast forward a few years, we continue to build our portfolio and our balance sheet. At the same time, we've built a few service companies. My wife runs our brokerage. We have a property management company, and we helped a lot of friends and a lot of people build amazing portfolios during that time here in South Florida. It was a really fantastic time to buy real estate, right? And we learned from A through Z, from buying land to buying condos to buying distressed office buildings. It was it made me fall in love with real estate even more because there's so much to it, right? And I just kept learning and learning. And so that's my in love with real estate background from a very, very young age. And yes, I went to school for IT, but that was too boring for me.
So I want to tell you, I heard 3 key points out of this that I think that everybody can adopt. And one of them is the immigrant spirit. That's what I call it. And I can't tell you how many clients we've had that have come from another country believing that the US is the land of opportunity and anything is possible. And so they go do it. Well, the rest of us are like, oh, but we could get sued, or oh, but this could go wrong, or I could lose these people's money, or, and we end up just talking ourselves out of it. Well, these immigrants are like, this is land of opportunity. Anything is possible, just do it. And so we all need to, when we catch ourselves, stopping ourselves from going forward or in a rut because of fear, we need to think about what would an immigrant do who believes this is a land of opportunity. Get past that stuff and just take the leap. So I've heard this story over and over and over again. If you listen to other podcasts we've done with Vinny Chopra, with Marcin Draws, we talk specifically about that and how that has helped shape them and their career. But what I find from the immigrant spirit is not only do they want to succeed for themselves, but they're very, very committed to sharing their journey and helping others every way that they can, because they believe that it's not just possible for them, it's possible for everyone. So if you aren't an immigrant, go meet one, go hang out with one. You got to absorb some of that spirit, because that's going to help propel you forward in a way that you might have been too fearful to do on your own before. And just having that person like, no, just do it, just go, just don't be afraid. Just, you can make this happen. It can help propel you forward. So I heard that. I heard that you got a mentor from your first house. That's key. You were fortunate there. We have a lot of clients that try to do things alone just by reading, by going on the internet. I can tell you that for the last several hours between yesterday and today, I have been fighting with AI. I'm like literally having an argument. Like, no, you are wrong. Look it up. And then it will come back and be like, Oh, yeah, okay, I guess.
Right.
So just be careful because you can go down some AI training course and get off into the very wrong direction in a hurry if you don't know the right questions to ask. So even though you might be able to find out everything you want to know on AI, if you don't know the right questions to ask or the right time to say, you are flat out wrong, fix it, figure it out, come back to me with the right answer, then you're going to end up potentially, down the wrong path and maybe at a dead end. So just be aware of that. A mentor or a coach, having somebody else who knows what you should be doing and can help keep you on track is extremely helpful and will keep you from going off in the wrong direction. Um,
Absolutely.
and then I also learned that you have a lifelong learning. Uh, that drive, right? Those of us who have that lifelong learning drive, we continue to grow. Other times, sometimes people get stuck in this is only what I know. This is how I've always done it. This is the way it's done. And we don't move forward when there are better ways to do things, better technology, better tools. And I'm not saying don't use AI because I use it every single day, but I also know when to fight back when I'm talking to you about a legal issue that I know it's flat out wrong about. And the reason it's wrong is because it did the same thing any ordinary person would do. It went and asked a question, maybe the wrong question, or grabbed some bit of data that maybe didn't answer the right question, and now it went down the wrong road. So you got to bring it back, just like we have to do that with our clients and help bring them back. No, 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 no. We're not dealing with that. That doesn't apply. We're here. Stay focused. So I think those are, key things. Be a lifelong learner, find a mentor, get a coach for your first few deals. After a while, you might not need them anymore. If you decide to go into a different asset class, then, get a coach in that asset class so that you can learn the ropes from other people that have been there before and you don't make, $100,000 mistakes with others' money. And then, think about when you're stuck in fear, having that immigrant spirit. What do you think, Krisha? I know that having people getting stuck in fear is kind of something, Krisha is a fear whisperer. She can help you through it.
Yeah, I totally agree with those three statements and the metaphors around them, right? Like, yeah, having this is all about having we were actually talking about this in the mastermind yesterday, right? It's like it's the open mindset, it's the growth mindset, it's being curious and wanting to learn and being vulnerable enough to raise your hand and say, okay, I'm not sure I understand this, and I know that I need help with this, right? Like that's where I see people being the most successful is when they're like, okay, I don't quite get this. Tell me more, right? Like tell me more. It's like the best question you can ask in any of it. And then that way you will learn and you'll learn the shortcuts, you'll learn what not to do and and then I think, I mean, there's still trial and error. We're all still stubborn humans at the end of the day, and we're all on our journey and we need to learn the way we learn, right? But I do think that with those 3 points, we can get to where we want to go much faster. And Hector, you're such a beautiful, like, wealth of wisdom in our conversations on the mastermind too. Like you provide so much, um, like
Thank you.
so
I
much
do
generous.
try to add as much value as
Yeah,
possible. But,
yeah,
I think it's kind of like Kim says, it's like I want so many more people to do this. Like it's for me again, I love real estate. I love and so anytime I get to share the knowledge and my experience, that's why I coach now for our mentors. It's just a matter of who else I can help to go down this path. And obviously it's a little self-serving too, right? I learn more and I mean Kim says this all the time. She learns from her clients in the mastermind, right? We're
Every
all
day.
here to learn at the end of the day. I one of the I don't I'll probably butcher it, but I heard a saying from an old mentor a long time ago that the moment you feel like you learned it all is the moment you start to die
Oh, wow.
and you start to go backwards because you're either growing or you're dying. As
yeah.
I think that was Tony Robbins. So
Wow.
can't remember exactly who said it, but it made a lot of sense to me many years ago, and been trying not to die for a long time and just keep growing.
Well, and if you do feel like, hey, I know everything I need to know about this particular thing, well, then that's probably time to expand your horizons a little bit and maybe learn
Yeah.
something in new
Learn something
aspect
new.
of it, or maybe a different asset class. Just kind of interesting. We talked about this on the mastermind too, but just an interesting little factoid is we went through, Krisha and our team went through our current clients just recently, and where 3, 4 years ago, we would have had 80% multifamily clients. We're now at a point where we have less than 20% multifamily clients. And all the other clients, we have a lot of clients. They're all doing other things. And so, if you're stuck, you're like, hey, I can't, I'm a multifamily investor. I can't get anything done. I can't find anything. There's no good deals. Well, then it's time for you to learn some different skills. And you can always come back because the multifamily will, likely turn around. There will be some opportunities, but you don't want to just sit on the sidelines waiting, while your skills get rusty. And in the meantime, you could be investing in a different asset class. So we've been on a mission to teach people about other asset classes beyond multifamily. GoBeyondMultifamily.com is a website that we have where you can actually watch a 2-day seminar that we did on this in June. A lot of great speakers, Hector being one of them. And, we just want to make sure that you all realize you're real estate investors, you're not multifamily investors. And just because multifamily, that particular market isn't the best right now, doesn't mean that you can't be still investing. You just have to get a little more education. So open your horizons, learn something new, and maybe go off in a different direction for a little bit. But keep your eye on what's going on in multifamily because the opportunities may come back and you want to be ready to jump when they do. So that's kind of what I'm thinking. So tell us about your fund. What motivated you to launch it? What's its focus? What are you guys doing?
So fund is a combination of single family rental portfolio, BTR, and multifamily is kind of the assets that we go for. We'll do fix and flip or development if the time is right, but I don't think the time is right for either one of those two right now. And that's the idea behind the fund, right? To your credit, you really helped me a lot with the design of it. What led me there was I think a combination of one, it was mentioned to me by one of my investors, suggested, hey, you should start a fund. And then I started really getting in deep into the topic of investment knowledge with my brother-in-law, who was one of my first early investors, who's a dentist, by the way. And he started sharing with me how he came out of college with a massive amount of debt, a great career, making great money, but very little knowledge of investments. And what he shared with me, what a lot of what they get taught is the very basics. Hey, go hire a financial advisor, give them your money, they'll put it all in the stock market, work to your 70, you'll pay your student loans off, and you'll retire at 70, 75 with a nice little nest egg in the stock market. I was like, man, that is terribly sad, dude. Like you should be living a way more fun life than that.
Yeah.
And then I realized that there was such a big gap there. And again, I want this for so many more people. I also saw in 2008, a lot of my friends that were business owners back then, and I saw the real estate plays that they made that dragged their businesses under. I say, hey, what if maybe I could be the person that these people invest with? And this is what I do all day long. I'm a little bit less likely to make mistakes than someone who's doing this part-time, a weekend warrior, right? I've been doing this for a really long time. And it was the desire to, again, like you said, help more people. And how could I do that? And that launched me on the probably like 2019 on the let's learn about this group investment thing and fund. And fund wasn't my first, idea. I just, went off and started learning about it. And that's what we landed on through your advice.
Yes, that's right. And we had some stops and starts too, because I remember some of our early conversations. You're like, oh, and I want to do this. And I'm like, okay, I don't think that's a good idea. And you're like, no, I'm going to do it. And, I'll push back, but ultimately you're the client. You get to, I'm going to push back when I think you're making a mistake, but you're the client. If you say, hey, this is what I really want to do, we'll say, okay, that's fine. We'll do it. And then when you come back to us and you want us to fix it, we will charge you hourly. So that's fine too. Works for me.
Win-win, right?
I want to just like emphasize that point here for a quick second here, because like this is what makes us as a firm stand out, is that we will push back because we do see, like, we've done a lot of funds, a lot of offerings, right? We've seen like the client is one person on that side, but we've seen for over 450 on this side. So we've seen like all of the things that could go wrong and could go right, and who's successful, who's not doing too well. And, and then layer on top of that the law, right? Because there's a law element to all of this. In air quotes, she does.
Yeah.
But a legit law side to it. And so, Kim, I like that you push back on people because it shows that you care, and that we're not just paper pushers. We're not just here to take somebody's money and just let them go off and make mistakes, right? And I think, if I may, one of the things that Hector, you shared with me once, or that helped make your fund successful, was doing the marketing first. I think was like, I don't know if now's the time for us to talk about that, but I thought that was
Right.
really neat, right? Like how you, so when we do a blind pool fund, we include an investment summary, and this is basically like your marketing document for your fund, right? And I believe that you had yours done in advance, and you're doing a 506C offering, is that correct?
B.
A B offering, okay.
Yeah.
So yeah, and so anyway, you had your investment summary, which is the business plan of what the fund was doing, and you launched that just before Christmas, is that right? And
Yep.
then so you were building this hype, creating these substantive pre-existing relationships, and then when it came time to like launch the fund, you had this really warm or hot market, and then you were able to fill it like instantly. Can you speak more to that?
Absolutely. So before we get off the topic of the pushback was actually very important too. Because when I came, I don't know if you remember the first call, but my it was gonna be this big. I wanted to buy anything. I felt like buying any asset because I've done it before. So it's like, why not? And then, oh, let's go for, I had this huge number in my head, and Kim's like, whoa, 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 calm down. This is your first fund. Let's narrow it in. You want options, but let's focus on housing. That's what I had the bulk of my experience. So it was a lot of things that went into that back and forth and that pushback, that I took it all into advice, and quite frankly, you were right about all of it. You know what I mean? And so I think that that's important. And the marketing part was also your advice, and that's kind of how we narrowed up our structure. Obviously, I went out and I came to you guys, and I went to actually a lot of attorneys right before I hired you guys. And then we sat down, we talked about it, and either Kim or Mola recommended, hey, let's do the marketing piece, go out, let's talk to you investors and see if this is the right move, if this is the right structure, so to speak, and that's what we did. And so that helped to create not just the buzz, Krisha, but and the ability to move fast, but it also helped me to hone in the structure and kind of get it figured out before the docs were written. And now I gotta pay Kim hourly to fix the
Right.
thing,
Yeah.
right?
Yeah.
Yeah, and just to explain that part, I think we talked about a few concepts here that I want to maybe spell out for the audience, because I think there's a lot of terminology out there, and sometimes people use it in a different way than how we use it, and we just want to make sure that when we're talking about it, you understand how our context. So when we're talking about a blind pool fund versus a syndicate, okay, a syndicate means you have something under contract, you know exactly how much you need to buy it, you know exactly what you're going to do to that specific thing to make it produce income that can be shared with your investors. Doesn't matter if it's real estate, it could be a small business, whatever it is, you have a business plan for that specific thing. We call that a specified offering. In the industry, it's called a syndicate. Okay. In business, they call it something else. It isn't called it's a business offering. It isn't called a syndicate, but in real estate, we call it a syndicate. Same thing, just two different terms. A blind pool fund, on the other way, is where you have a business plan but no properties. You don't have anything under contract. You're promoting your concept. This is what I'm going to buy. I'm going to raise capital and then I'm going to go look for these things. And when I find things that meet the parameters that I put in my business plan for this fund, then I'm going to be able to go out and, acquire those with with those investors. And you just pool more and more investors as you grow, as you bring in more assets, you keep raising money. There's different models that we can use for funds. That's beyond the scope of this conversation, but just there are multiple models that can be used, and there's hybrids. There's a hybrid model that we do a lot of, where people do have kind of an overall company that has individual series or cells for each investment that has separate investors in it. So we can do a syndicate, we can do a fund where we just pull everybody together, buy multiple assets, as many as you can with the money you raise, or you can do this hybrid model, and there's even variations on that. So Hector's is a blind pool fund. So this is where he's got multiple investors all investing in one company. The company is buying assets. The assets are generating income, and all that income is pooled at the fund level where it's then distributed to investors. And so there's all these rules that we create in the operating agreements explaining how that works when there's income from properties. Is it pooled? Is it considered one by one? What happens when you sell something? That all that stuff is accounted for in the fund. So there's a lot of planning that goes into a fund. We have created our own internal marketing team that creates the business plan. We call it an investment summary and a pitch deck and a one pager for all of our fund clients. It's part of our lump sum fee because we know that it's really difficult to find people that will do what you need. They won't understand what you want. It'll take a lot more time, probably cost a lot more money. And we've got a team that we've done a zillion of these things. We already know, well, maybe not a zillion, but we've done a lot of them, and we know what's needed, and we put it in this beautiful graphic design that makes you look spectacular, right? The whole goal is to make you look like, hey, we're polished, we're a legit company, we're a legit fund. And that's what Hector did, is he got those marketing materials done first after sitting down with us, and kind of, we still modeled the fund. We still decided, here's what we think it's going to be. And then because he had those marketing materials, he was able to present it and then get feedback from his prospective investors before we created the legal documents that helped refine his model. And so that was really helpful for him. And we think that that's going to help you create a lot of success as well. If you really know what you're doing, you just get it all done at once. You go out, you market it if you got a lot of experience. But a fund is not something you're going to do first off. It's the hardest way to raise money, actually. It is the hardest way to raise money. So you have to be able to prove a track record in that asset class that you're going to put into a fund. If you don't have it, you got to bring in another fund management team member to do it. Okay, cool. So what was the biggest misconception you had before you got started?
A lot of them. The biggest, the biggest was probably that once I went out to investors and I got the capital, the rest would be easy. A lot of investors like myself, I've had success, thank God, right, in investing, and capital was always a bottleneck, right? It was mostly my capital or one or two investors, and so I'm like, oh, once I take care of this bottleneck, the world will open up to me. Now, there's always a lot of challenges and a lot of things that come up, including markets drying up on you, and then you got capital, no deals. So that was for sure, I think, probably one of my biggest ones. Let's just get, we raise the capital and we'll be able to do this.
Oh yeah, I had a fund client one time who raised $7 million in 3 days, and it was fantastic because he hyped his fund. He did a launch, just like a book launch. You get everybody to invest on one day, you get everybody to buy on one day if you're doing a book launch. And he raised, this $7 million in a spectacular amount of time, and then he couldn't find deals, and he ended up giving it all back. And his investors said, Yeah, we like going with the specific offering model, specified offering model. We'll just stick with syndicates. And, and that client actually tried twice to do a fund and had done a bunch of syndicates and ended up just saying, you know what, my investors like just investing in some specific deal. We'll just stick with that model. It works better for them. So it's not for everyone. There are huge funds out there. There's $100 million funds out there. These people have really dedicated their time and efforts to generating a huge marketing machine that can get the word out and keep that fund growing. And they have a huge network of, probably staff out there talking to brokers, finding deals all the time. Because to have a successful fund, you really need to have significant deal flow. Otherwise, one without the other, you raise the money, you don't have anything to invest in, or can't raise the money, you got things to invest in. Either way, you got to have a pretty good ongoing marketing plan for investors. Tell us about how you kind of created what is your marketing plan for investors? How did you craft that as your fund evolved?
So because we're 506B, we did a lot of that upfront, right? And established the relationships upfront. But one of the key things that I did early on was partner with successful people that had really, number one, good businesses, good reputations in the marketplace. They were good friends of mine, whether through service. Actually, one of them is my brother-in-law, like I said, so he's family, right? But we've operated in deals together, and same thing with my other partner, Millen. And then so one of the things that have really helped me be successful in raising capital for the fund, honestly, has been their network. And my partners, just again, good reputation, and that extends like, hey, this is my partner Hector, we're doing this investment together. Automatically, my credibility goes from here to here, right?
Yeah.
Because this is someone that they've known for many years. They're friends. The bulk of our investors on the fund are either long-term friends of mine or my partners. And I mean long-term, not like they just met last month. And so I think that really helped out. I can't take a bunch of credit for that, to be honest with you. We put together little events, whether it's webinars or in person, little presentations at various places. But again, they bring in the network. One or two people might show up from my network, but like 10 show up from their network, right? And I think that has been ultimately extremely helpful.
Oh, go ahead, Krisha.
I was just gonna say who, not how. We talk
Yeah.
about that book a lot, right?
Right.
Yeah.
I can't think of the author right now. It's on my bookshelf way over there. But who, not how. You're like it is who you know sometimes too, right? Like that's what I'm hearing you say there is like, and Kim, you talk about this a lot as well on like when I hear you speak to this a lot in other podcasts in our mastermind, things like that. It's just like partner, 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 partner. Get in there with somebody else who's done this or who has the connections or something. Like, don't do this alone because it's a lot of work. That's what I
It's a huge job. Each aspect of any securities offering is a full-time job by itself, and there's always, kind of two or three departments that you need to fulfill. And one of them is you got to have somebody who's searching and talking to brokers, looking for deals, underwriting deals, conducting the due diligence, overseeing property managers. You also have to have somebody who is constantly talking to investors, developing relationships, keeping those investors informed. Those are really two separate skill sets.
Yeah.
And two different personality types. But you really need both. It's very hard for one person to try to do all of it on their own. They might be really good operators or really good, real estate developers, and they're great at getting just stuff done, but they don't have time or don't know, they're not social, they don't go out, they don't talk to investors on a regular basis, they don't have a big network, they have to bring somebody onto their team that has that. And then, I think you mentioned something else. We were talking earlier about, when you came to us, you thought, hey, I'm just going to buy everything, under the sun. I want to invest in office buildings and self-storage and, multifamily and residential. And we call those kitchen sink offerings. You can name your fund that if you like. You might not have much success with it, but the kitchen sink fund, we're going to invest in whatever we want, whenever we want, whatever we find that we like, and we don't really care what you want. So we always try to get people to narrow down into what is the expertise of your asset management team. Who are they? What have they been experienced with before? Well, Hector brought the experience with residential real estate. Single family residential real estate easily translates into multifamily residential real estate. It's all about providing, housing, collecting rent, maintaining, and maintaining the property and all of the things that go along with property management. So it doesn't matter if you started in the single family world, it's an easy transition to multifamily. Doesn't mean you couldn't do a fund with, hey, we're going to do retail, self-storage, and multifamily. I have clients that do that. They're developers. They've developed all those things multiple times. So they can lump all those things together. If you want, though, if you're the residential person and you want to also go into self-storage, you really got to have someone on your asset management team who knows self-storage. But just like you have to decide your niche in the real estate market in order to have a successful fund, you also can benefit extremely well by having a niche for your investors. Tell us about your niche.
Yeah.
My niche is doctors, dentists, I should say specifically. There's a couple doctors and business owners. The business owners comes from a lot of the dentists own their practices, right? At least the more successful ones. After a while, that's what they end up doing. And I'll be honest, again, the universe provides. My brother-in-law's a dentist, right? My sister married a dentist. As I'm investing, he's like, hey, this is interesting. Can I give you some money? And he was my first dentist investor, then his partner, and then another friend. And next thing you know, I have these dentist friends that are investing with me. And again, I brought you to the story of the need that these guys have. Some of them are a lot more sophisticated, and they learn on their own how to become investors. I even have a surgeon buddy who's he's an oral surgeon, and he does his own. He was doing his own flips and construction, managing construction. I'm like, come on, man, like you need to focus on surgery and partner with experts like me, and everybody. And I think that that niching down has really also helped me to kind of expand, because now I work with, a couple of dentists, another, oh yeah, you already have dentist investors. Again, it just becomes one of those things that you get credibility by association. And now it makes it easier also for me to talk about now. They might each have similar issues that I can potentially help them with through our service companies, right? Hey, I want to upgrade my office. I want to buy another office for my practice. Well, I can still help with that. I can still provide value to them with yet one more thing. And I'm not diluted dealing with, a bunch of everybody, like you said, the kitchen sink lineup of investors, right?
Mm-hmm.
Yeah, you've really got to, and so I always say, build, use all available lanes of the highway. Hey, if you come from another, and it's a metaphor, but if you're coming from another profession where you had peers before, you still speak their language, they can still relate to you. That's the group that you want to start, educating about what you're doing. It's really more of a selling. It's more of an education process than a sales process. Wouldn't you agree, Hector? What's your
Absolutely. Absolutely. There is, especially with investing, you're not going to sell somebody or convince somebody to invest with you. I mean, it's got to be more of an educational thing, and I believe a trust building thing. In fact, I think the bulk of the investors, both passive and active, that got hurt over the last couple of years was just lack of knowing their team, lack of knowing who they were investing with, and really that familiarity that comes with just sharing knowledge and being helpful to people versus selling them on an idea.
Mhm.
Yeah, that's huge. All right. So how did you, was having that investment summary up front, did that help you determine what to offer your investors in terms of returns or structure? How did it refine what you were offering?
So to refine the offering, we did a couple of things. Obviously, took your advice that created the first general idea. And then I also went out into the marketplace and I started looking at as many syndication presentations and fund presentations as I could and see what other fund managers and other syndications were offering. And then circulated that marketing piece and talked to people and where was everyone at, right? If 4 or 5 people were telling me the same thing about something, well, that makes sense. If it was just, oh yeah, one person that wants 30% returns, it's like, okay, this is just the one guy, he's not meant to invest in real estate, you know? But it was very helpful from the refining because it was in writing. It was a beautiful presentation, right? You guys did a phenomenal job on that. And I could give something, and it's not just me having a conversation with an investor. "Oh, I'm thinking we can do X, Y, and Z." Now they can actually read that material. I can email it. We can sit together at a coffee shop. They can flip through it. And so I think that was one of the keys to our success early on, for sure.
That's great. And so what about like how do you manage all the back end logistics, keeping track of who invested what and all the different assets that you own? What tell us about that.
So we very early on, even when I was still just circulating the marketing piece, I got an investor management portal. I'm coming from an IT background. I knew that software is, I didn't want to rely on spreadsheets to keep something important as people's lives investments, on an Excel sheet that I could accidentally delete a formula.
Yeah.
And I again from my IT background, I know how difficult it is to switch between softwares. And so I started with one. It actually didn't end up working out like a month before we launched the fund. I switched to the other one that I had been testing out. And that's been, and not to say that we won't have to change in the future, but going through it ahead of time really helped me to like it'll reduce the iterations that I now have to move investors from one platform to the next. But that's how we keep track of the more important stuff is through that management portal. It's extremely helpful. It keeps track of who invested what, all the forms, all the signed documents, everything is e-signed. I don't have to be responsible for securing this information. It's secure on the platform. I know you're big on that.
That's you. Yes.
And that's even how we distribute K1s, make distributions. The K1s go from my CPA's secret portal to my fund portal, and they're not lingering in outer space out there with private information.
Yeah, and everybody has to log in. They have to create their own account, so it keeps the snoopers out. And they I think you're using InvestNext now, right?
Yes,
Yeah,
yes,
and
exactly.
they are, we have a relationship with InvestNext. In fact, they've given us some preferential treatment for our clients. So if you go to syndicationattorneys.com, there's more than them listed there, but InvestNext is certainly one of our trusted vendors. And so I would encourage you to, check them all out. But, the ones that are on our platform, InvestNext, also Cashflow Portal, and Janover.co is another one. And I would encourage you to check all of them out because each of them has kind of a different look, a different feel. Maybe one's more CRM focused, one's more, just deal focused. And you just got to find one that has that right, that right feel for you. The other thing I like about InvestNext, and I haven't used it myself, but I have heard this from other clients and from the InvestNext team, is that if you are doing an offering where you have co-GPs coming in and bringing in investors to you, that there's a way to segment them and kind of, assign them to that co-GP so that they're not just out there for everybody, else that might be in the deal to harvest and try to use for future deals. And that's something that's always important if you have other people that want to partner with you at the asset management level, maybe to get some experience, maybe to bring their own investors. They don't have a deal, you need money. You have a lot of reasons you want to do that, but it's easier if you can find a way to assure them that, hey, we're going to segment your investors, we're going to have a non-disclosure, non-circumvent agreement. That's something we provide to our clients, that keeps them from being accessible to other people. And then the main sponsor is, who's signing on the loan and all of that. They have to have access to all of the investors in the deal, but they also should be willing to sign a non-disclosure, non-circumvent agreement saying, hey, we're not going to go after this entire group. We're just going to, focus on the ones we have for our next deals. Unless you want to participate with us and bring your investors again, then you can have the same kind of setup. So that's important for people to understand. I don't think you use co-GPs in your deal because you really have mastered the art of developing relationships with your own investors, correct?
I wouldn't go as far as to say mastered. I am working on mastering the art of building those
Okay.
relationships. But yes, absolutely. We in the fund we don't have co-GPs, but I've used the capabilities within my portal to help others with their deals.
Okay.
And yeah, it's actually very it's very neat because like you said, you get to keep that privacy, right? And everybody has kind of like their own portal. But now I gotta go check what kind of discount. I don't know if they know that I'm your client. I gotta go and
Yeah,
check it.
well, I think that came.
You got me thinking. I'm like, hold on, because they
You
just
can
raised
you
the
can go
prices.
and
So I'm
ask
like,
them, hey, by the way, I'm a long-term syndication attorney's client, and I'm the reason that they even got a deal with you because you used to talk about them so much, and how much easier that's made your life managing your fund, and so we talked about them too, and then when we met them, we're like, hey, we've got a client that loves you, so you probably were a big reason that we have the relationship with them. Maybe you can
Yeah.
get a discount
Maybe
based on that.
Yeah. Well, we just recently arranged
Yes.
those discounts. So come through me, send me an email, Krisha at Syndication Attorneys for anybody listening. And Hector, yeah, send me an email and I'll make a connection and I'll see if there's something they can do like in retroactive client.
it doesn't need to be retro. We got a long future ahead of us, but
Yeah.
yes.
There you go.
Grandfather.
Yeah. Um, okay, so let's talk about how you went about assembling your fund management team because we did some stops and starts with that too, right?
Yeah.
How did that go?
There was another member that unfortunately, very early on, and thankfully it was very early on. Just life responsibilities. Again, we were all under a little bit of a misconception. He was the other active guy on the fund like me, but been a fix and flipper for over a decade. Phenomenal guy. We still have a great relationship to this day, in part because of how well you write the documents, and it helped that separation be very, very easy. It was very black and white. And we're still great friends to this day. As a matter of fact, today's his birthday. I'll be calling him later. And the way I went about it is the way that I do guess most things in life. I start with those closest to me and see who would be the right fit for what I'm doing. So I started with my brother-in-law, my really good friend, that's his partner for a very long time. My advisors are, one of them is my sister who runs my property management company, so absolute expert when it comes to property management. And the other one is my long-term real estate attorney, who you met at the beginning. She was part of the interview process, and I wanted to have a little bit of just really smart people around me. And so, I started looking around who are the smartest people around me that could again all be in one way or another bring their expertise, their network, their connections to this thing, because it's not just me, right? While I'm the one that has been investing for the longest and I have probably the longest track record, they're all extremely smart people in their own way. They all run businesses and their own portfolios too. So I wanted to make sure that there was a lot of capability, and not just in the execution part of it, but in making sure that we could all as a group make decisions to keep us out of trouble. Because that's, at the end of the day, that's one of the more important things, right? Is preserve that principle.
Mm-hmm.
And so, I have some kind of rules of thumbs about who to include in your management team and who not. So I always say, and I always caution people, and I know I cautioned you about this in the beginning, be very careful about bringing people into your team that are also service providers for your business. Because if for whatever reason they can't or they don't perform their job well and you need to move on, it's very hard to extricate them from your asset management entity. And and it becomes very awkward to do that unless you have some very clear, expectations in the front. Hey, if I stop using you for this, you're no longer going to be part of that. You're going to have to resign, and we're not necessarily going to buy you out for $1 zillion. So you've got to have that, that clear distinction. We will pay you for your services. And the other thing is, don't think, oh, I'm just going to exchange interests instead of paying them for services. Because here's what happens with that. You get to be last on their list because they've got all these other paying clients and they still need to pay their bills. And your stuff is going to be a long-term reward. And yes, they want to do it, they want to participate, but it gets done last and maybe never. And then, they feel bad, you feel bad. Even if you do get in a breakup situation, I tell people this all the time, even in interpersonal relationships, but in investor relationships or partner relationships, just because you don't work together doesn't mean you're not perfect for somebody else, and it doesn't mean that either one of you is wrong. You're just not a good fit. So, get past the blame, okay, and just get to the focus on the mechanics of the breakup. Hey, how are we going to do this? And Hector was able to do that successfully, obviously, or he wouldn't still be friends with that person. And so, you just have to say, hey, look, nothing wrong with you. You're not a bad person. I'm not telling you, you're at fault for anything. It just seems like this isn't a good fit for you. So let's, okay with you. I kind of need to bring somebody else in to fill that role. And let's just split as friends, and a lot of times you can do that. But if you get angry and you start blaming, that's where people get into, just ugly, messy, partnership lawsuits and, messy divorces, all those things. Just, get past the blame and just say, hey, we're just not a good fit for each other. Let's move on. Right. One of the ways that makes it easier to do that is to define a very clear scope of work for every single person in your asset management team before you let them sign. So attach it. We have a place in our operating agreements for the asset management team where you can attach those scopes of work to the actual operating agreement. And then if somebody can't or is unwilling to perform it, then it's easy to go back to them and say, hey, originally we agreed you were going to do this, 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 and this, and now because you've moved across the country or you got this other job or you're just not interested, you're not able, you're not doing these things. I still need to fill that job, so I'm going to cut your returns, or I need to replace you, just like you would any other employee in your firm. And and the other thing is, don't have too many people in the asset management team of a syndicate or a fund. My recommendation is 2 to 5, never more than 5. Anything more than 5, I have just seen too many disagreements, dissension, can't get everybody on a meeting, can't make any decisions. But ultimately, what happens is 2 or 3 people end up doing all the work. The rest are just along for the ride. The money gets split up too many ways. Nobody makes enough money for the work that they're doing, or the 2 or 3 people that are doing all the work aren't getting paid sufficiently for what they're doing, causes resentment, causes dissension, causes that blame game, and pretty soon the whole thing starts to go sour. When you do a syndication or a fund, when you have passive investors, you have a fiduciary responsibility to your investors, put their interests ahead of your own. So even if you hate this person, doesn't matter. Too bad for you. Get over it. Be an adult. Do what is needed to protect your investors and move on. And so, be careful of too many people and make sure that you have defined roles and make sure they're written down. If you have those things, then it's going to be a lot easier for you to make those changes when something does happen. And it could be entirely not their fault, right? Yeah, all of a sudden, they have to spend their time, caring for an aging parent, or, all of a sudden their time just isn't available for what they wanted to do. They just can't. And, life happens. Let people live their lives, and don't blame them just for having to do that. So just, figure that out,
This
and you'll
is
be happier.
the stuff that we put in operating agreements. Is that correct?
Yeah.
Well, we have a place for the clients themselves to add the scopes of work for their all of the members of their team. And those that do it then have an easy path. If somebody's not able to do the job or doesn't perform as expected, then it becomes much easier to have that conversation. Hey, you agreed to this. It's not getting done. So and so is doing it. We're going to reallocate that portion of your earnings to them. And without that, it's a lot harder because it's, he said, she said, right? And, well, I thought I was just getting this because, and it's like, no, we also thought you were going to do this, this, and this. So if you have it written down, a lot easier just to say, point it out, you signed it, you agreed to it. Let's figure this out. Okay, well, wow, we've got just 5 minutes left. Let's see. So, was there ever a moment where you felt pressured to deploy capital before you were ready, and how did you handle it?
Probably not before I was ready, but before the market was giving me the right opportunities. Because I obviously I was ready from the one that we went on this venture, but shortly after getting launched, the market kind of just dried up a little bit and it got really weird.
Yeah.
It's it got weird, right? And at that point, I absolutely had to make a decision. Do I deploy this capital just for the sake of deploying it and worrying about the proverbial IRR clock that everybody talks about? And I've never ever operated like that in all my history of investing. Granted, it was mostly my own money, so if it just sat around, it just sat around, right? But I was definitely not going to allow that pressure, and a lot of it was pressure, mostly from myself, right? And then just wanting to perform well for my investors. So it did take a lot of meditating to make sure that we got in the right deals during that weird time early on in 23, where the market was just really strange. And a lot of the pressure, honestly, did not come from my team or the investors. We kept a really good line of communications open with the investors. Everybody was understanding of what was going on, and I think that was very helpful. And me dealing with it. Aside from my sticking to my buy box and my core beliefs, and it's like there's absolutely no way I'll go below this threshold right here, no matter what is happening. It was also the fact that I had that support from my teammates, the investors. It was kind of like a full scope to get past it, and a whole lot of meditation and morning routine work.
Okay. Yeah. We all do our share of that, and sometimes wish we had more time to do that. It's like, okay, how early can I get up and still get all that done, and
Right.
still sleep, right? So looking back, okay, I know the answer to this one. What was the smartest decision you made during your launch?
Oh man, definitely hiring syndication attorneys.
I knew the answer to that one. Absolutely knew the answer to that. That was a whole setup, right? Complete setup.
That was a great
Wish.
setup.
Yeah. Checks in the mail.
That's it. Mic drop. That's it.
Thank you, Hector.
Big discount on Hector's.
This is why we interview our clients.
Yeah, and if you want to be on our podcast and you're not a client, hey,
Yeah.
Chris and call. We'd love to have you as clients, and then we'd love to
And you
interview
can be on our podcast.
Absolutely.
Oh, geez.
Yeah, no, but seriously, I think it honestly came down to the team that I built around me. That was the absolute best decision, not just from the legal team with you guys, but my management team, the advisors that are on my team, but also coaches, and just assembling a team of people around me from Jeannie at our mentor. Like I said, you guys, my other manager who's also an attorney, just a plethora of really smart people, my CPA team. I mean, just again, it's a team effort. And I think that was the best decision was to make sure that I focused heavily on the team. And knowing that we would have a ton of challenges and I was going to rely on this group around me to get me past it. I am not afraid to ask for help.
Yeah, no,
I
you
will
can't
email you,
be.
call you, text you, you know it.
Yeah, and you know what? There's no there's no dumb questions, and it's like every single person has to to hear something for the first time, and sometimes they have to hear it multiple times before it kind of like makes sense because you have to be in that space where it's like, okay, I've kind of experienced this. Oh, now I know why she said that, right? So never a wrong question to ask. We love to answer those questions. That's why we do the mastermind, because it gives you a chance on a group setting to be able to ask questions that everybody else hasn't thought of yet. But I probably need to know that. I don't want. So it really just becomes kind of opportunity to share that information with everybody. All right, so how can people reach you if they want to learn more? To give us the name of your fund, and go ahead and give us some contact information for what you would like people to do if they want to reach out to you.
So the fund, I'm not sure if I should give the name out because it's 506B. You tell me, you're the attorney.
Oh, it's okay. I mean, you can talk about generally what you do. This isn't really a solicitation for investors. This is just, Hector willing freely to share information, just,
You coach
kind
too,
of,
right?
what's that?
Yeah, sorry, you coach people, don't you?
Yes.
He also does
I am a
coaching.
Yeah, I'm a coach with All Your Mentor. My fund is Cash for Real Estate Fund. I had a previous brand that was Cash for Real Estate, right? My contact info, I'm with the new website, HDZ Real Estate Partners, is the name of the company, and hdzpartners.com is the website. You can reach me there at info@hdzpartners.com. And that's HDZ, like my last name, right?
Yeah, and I would like you all to know, yeah, so HDZ like Hernandez,
Like
and it's
Hernandez.
cash. It's say that again slowly. The name of your fund is,
Cash for Real Estate Fund.
and isn't it the number four, not the,
Yes, correct. Yes, the number 4. Yep.
Okay.
yeah, cash for real estate. Yeah. So, all right, Hector, this has been amazing. We're super excited that you've been such a loyal client, but we're excited that you're able to share your message through our platform, and I hope some people reach out to you, and you're able to keep building those relationships, because that's really what it's about. Is once you're in the securities business of bringing investors into your deals as passive investors, you need to constantly be building and replenishing your database of prospective investors, developing relationships with people, and and helping them, educating them on how these types of investments work, so that they can be investing with you in future deals. And you never know where these things go, but the more prospective investors you have in your database, and the more deals you're ultimately going to be able to do, and you're not going to be afraid to pull the trigger. So,
Uh,
thank you
Well,
so much.
thank you so much for having me. This has been an absolute honor and a lot of fun. I mean, I can't believe that the hour flew by already.
Oh, I know.
I'm glad to be able to, kind of share my story, and I'm really glad that I picked syndication attorneys. Honestly, it's been amazing to have you guys on my team.
Thank you so much. All
All right.
right. You have
Thank
a
you.
great day. All right. Bye-bye.
Sure. Thanks, Kim. Bye. Bye, everyone.